Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 16th of October, 2022. And this past week we've seen silver prices fall by as much as 9%. We take a look as to why this has happened and what we envisage is going to happen to both the gold and silver price in the next week or so to come. Now, this video is a repeat of the video we produced yesterday, which is our normal weekly update. So without further ado, let's see what's been happening this past week. Gold fell $51 last week, falling from $1,695 to $1,644, having hit a high of $1,706 and a low of $1,640, a fall of 3%, and a lower low and a lower high than the week before. In sterling terms, gold finished the week at £1,471, that's down £58. And in euros it closed at €1,691, that's down €49. Silver fell $1.87, falling from $20.16 to $18.29, having hit a high of $20.47 and a low of $18.10, a fall of 9.3%, yes, 9.3%, and like gold reaching a lower high and a lower low than the previous week. In sterling terms, silver closed at £16.37, that's down £1.82, and in euros it closed at 18.82 euros, that's down 1.89 euros. The gold to silver ratio, of course, therefore rose quite significantly from 84 to 1 to 90 to 1. Now, looking at the prediction we made last week, we said we expect to see gold trade between $16.30 and $17.30, and we forecast silver to trade between $19 and $21 with $18 to $21.50 as outliers. Well, gold traded comfortably within our normal trading range, while silver, which basically was on a descent from opening, traded towards the lower end of our outlier range and closed 29 cents above the bottom of our outlier range. The difference between gold's high and low was $66, similar to the previous week, which was $69. The difference between silver's high and low was $2.37, and the week before was also quite a large spread of $2.19. So we're seeing quite a lot of fluctuations here. Now, before we look at other financials, just a warning against the pumpers. Sorry, if we had the time, we would measure the number of pumpers videos against the poor performance of the metals after those videos come out. You see, the pumpers, many of whom have a vested interest in the price of gold and silver going up, really know that their prices will be under pressure in the weeks and months to come. And their businesses and investments will suffer as a result. So what do? They produce videos, and many of them telling you that there are silver shortages, and the prices are about to skyrocket, and the dollar is on the verge of collapse. They've been doing this, not just for years, but for decades. And so whenever you see a huge influx of such videos, it's almost a guarantee the price is due to fall. What is so sad is that some very popular YouTube channels are repeating and promoting this nonsense. And we think they're doing a great injustice to their followers. Let's now look at other financials. Well, Bitcoin currently stands at $19,161. That's down $330 on the week. It seems to be oscillating between the late 18,000s and early 21,000s. And we're still of the view its price has further to fall by many thousands of dollars. Equities were mixed this past week, though, like the previous week, they did take quite a hit on Friday. The Dow Jones closed on Friday at 29,634. That's down 403 points on the day, but up 338 points on the week. The S&P 500 closed at 3,583, down 86 points on the day, and down 56 points on the week. And the Nasdaq Composite closed at 10,321, down 327 points on the day, and down 331 points on the week. Now, oils were thankfully lower this week after last week's quite significant rise. Brent crude closed at $91.63, that's down $6.29. And WTI crude closed at $85.61. That's down $7.03 on the week. Now the fall, not as large as the previous week's rise, but at least it's gone in the right direction this time. Now the dollar index stands at 113.31, and that's up 0.52 points on the week. Let's now take a look at the economic data, which was announced last week, and what we can look forward to this coming week. Okay, we shall go through this quite quickly. We can see that last week, on Tuesday, we had the New York Fed 5-year inflation expectations, which came in at 2.2% for October, higher than September's 2%. The producer price index, final demand, was higher at 0.4, compared with expectations of 0.2. We did have the FOMC minutes, which came out and really reinforced to a large extent that the Fed was going to remain hawkish. And then to support that and really guarantee that the Fed is going to continue to raise rates for the foreseeable future, we had the consumer price index. And that came in at September month to month at 0.4%. And that compares with 0.1 the previous month and 0.3 expectations. And then we had the core CPI, and it's this which, to a large extent, the Fed seems to take more notice of. And that came in at 0.6% for September, compared with expectations of 0.4. And that really has put the total headwind on gold and silver prices, because there's no doubt now, as a result of this, that the Fed will continue to raise rates. The saving grace at the moment, unless they have an emergency meeting, is that the FOMC, which is the part of the Fed that decides the interest rate rises or falls, does not meet now until November. So you get a few weeks' grace from even more pain. And the core CPI year on year is at 6.6%, with the normal CPI of 8.2. And then on Friday we had retail sales, which basically were unchanged, or not. There's not an increase or decrease for September, and that's against a proposed increase of 0.3%, which dampens things a little until you then see retail sales, excluding motor vehicles, actually was higher than expectations. Now this coming week, it's pretty maligned really, because we have the Empire State Manufacturing Index for October. That might have a little effect, frankly. And we have the Industrial Production Index on Tuesday for September. But broadly, the rest of the data that we have, housing permits and so forth, not a huge amount of attention unless there's a huge variance is given to this. We have, of course, the initial jobless claims on Thursday and leading economic indicators, and then the index of common inflation expectations. So this coming week, yes, the data will be useful, but not dramatically effective. So from a technical point of view, gold is almost undoubtedly heading for $1,600 and then $1,500 beneath that. There's now huge resistance at $1,750. Silver basically collapsed last week, and $18 is offering some resistance, but we're expecting to see that break over the next week or two, and we're still not ruling out $15 silver before the Fed ultimately reverses course on its interest rate movements. Silver could, in fact, have a double whammy: higher interest rates and the economy moving into a full-blown recession. The only stars, in our view, that silver will see over the next few months will be the result of a headache, and not because it's jettisoned to the moon. Now, of course, the Russia-Ukraine geopolitical situation could give precious metals a bit of a boost or a fillip, but frankly, even that, to some extent, seems to have had a relatively muted effect so far. So, with all of this in mind, what do we expect to see happen to gold and silver over the next week? Well, we're expecting gold to trade between $1,600 and $1,700. We're not really quite expecting the same volatility that we've had so far, unless there is an emergency meeting, with $1,575 to $1,725 as outliers. We forecast silver will trade somewhere between $17.50 and $19, with $17 to $20 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you for listening. If you haven't done so, do subscribe to the channel, not forgetting to press the bell sign. Meanwhile, have a safe, enjoyable weekend, and as always, a prosperous week ahead. And we are also still noting the comments vis-a-vis the change of our channel name. Keep them coming. We're not ignoring them, and I'll be able to give them much more attention over the next week or so. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.